Hi folks, it's Aidan CryptoBurb speaking. Welcome to today's Friday video. Today I'm going to show you and take you for a couple of charts to walk you through what's going on inside crypto and outside of crypto and what potentially may be around the corner for the entire 2023. We'll have a look at a seasonality charts and more. If you're ready to hear this and more, make sure to stay tuned. We're going there right in a second. Here, the Dow Jones Industrials chart on the top and Dow Jones Transportation on the bottom, you can tell there's been a little bit of disparity and divergence between the tops formations. First of all, inclining highs, higher highs on the Dow Jones Industrials and lower highs on the transportation chart. So both averages tell you about the health and the healthiness check on the overall stock market side. And you can tell that whenever there's this disparity, this bearish divergence, when one kind of like diverges from the another in terms of the highs sequence, then this tells you about the overall economy instability or that the stock's instability. The market is not really stable. The market is really about to expire in the last trend that it lasted until now. So here we're looking first of all at this series of bearish divergence highs when the top is inclining, the down is inclining. And what it tells you is, again, that the short-term impact has already probably come to action as we've seen a little bit of a breakdown. We're looking at a little bit of a sideways action below the critical support of 33,500 for Dow Jones Industrials. And this definitely does not kind of like show too much optimism for now, because for the longer the stocks trade below the critical support, the more likely the distribution or redistribution process comes up, which would overall naturally confirm this bearish divergence information, right? This tend to be preceding indicator. It tends to precede an actual drop in the market when it happens, and this was no different, actually. We tend to know that the first weeks of January also happen to be fairly positive on average for stocks. If we go to the Dow Jones Industrial Average over the 125 years, 126 years actually data right now, you can tell that this actual chart, detrended, excluding the trends, shows you that typically the first couple of days in January, somewhere towards mid-January, they tend to be positive on average, whereas the other side of the month, the second half of the month, tends to be more negative and downside oriented, which is likely to be followed overall in this regime, towards the February lows where the market typically bottoms and reaches local truths. So this is all to say that, of course, while there is no guarantee that the market is going to respect this pattern or that it's always going to be like that, there's no guarantee about that. However, if you look at it, 126 years of data, 126 years, that's a lot in the markets. 126 years of sample data, and it tells you that there is this emerging pattern of bullish inclining January, kind of like as an extension of bullish December's, more likely than not. You can tell that December's tend to be bullish. They tend to extend with something known as a Santa Claus rally. However, it didn't kind of like succeed as much as it did, in the past. Then it typically extends this rally and continues to lift off until the big point in January. That's not again, there is no guarantee it's going to happen. However, it's good to not ignore and pay attention to the seasonal trends, seasonal patterns, because overall, whatever peak point we have in January, then over the 126 years, we can tell that it's been more likely for the market to continue to decrease and decline into February, right? So I think it does make sense, so that if you plan any sort of like trades for crypto, if you plan to have any trades in stocks or overall assets, risk assets that are correlated, they do not seem to confirm it's a good time to kind of like just pump in lots of capital, a lot of investments in the first or actually in the second half of the month, in the second half of January. The way I would put it overall, if we go ahead and have those long-term looks in the markets, is that we probably may see some sort of like a crypto awakening. We've been in the market for 120 days. I think it's 121 days. Not a bad fun number. We've been a long time deep into this bear market. So, of course, there is no rule. There are no Satoshi Nakamoto never told us how long the bear markets can last on Bitcoin. Typically, it moves in the 4-year cycles when there's a 3-year bull market and 1-year bearish side of the thing. So we are a little bit overextended in terms of the bearish trends. You can tell that the 200-day trend, which kind of like is represented by the moving average here, on the 200-day trend, has started kind of like flattening out as well. So we know Bitcoin has been lagging a lot behind the stocks, behind the Dow Jones. If you go and have a look, at this flattened out curve, an average, like I said, ever since the bottom in October for the stocks, for the Dow Jones Industrials, for the largest cap stocks, the Bitcoin was lagging, and it's just started to flatten out this curve. So just maybe it's going to follow and adapt correlate back again strongly and positively with the stocks. And if that happens, the average may actually just start accounting for the slower period, for the sideways period, and kind of like flatten out. This would be the reference point. This would be the strong anchor for many technical traders to decide what price is fair. And if enough people just have a look at it this way, then just maybe the prices are going to gravitate towards this level and not another. So for now, we have the resistance that is based off the moving average of the mean reversion level at 19,600s, right? So regardless of what happens, because we don't know, we don't know for sure right now. We're moving sideways. It's not promising. It's not really bullish. It's rejected, the 18,200, which is not also bullish. However, the averaging flatten, the average flattening out and kind of like just going flat sideways tells me that the bear market regime just smoothens. It's getting less and less dramatic, less and less drastic, right? That's on one side. So it's an overall positive sign and something that may inspire just a little bit of hope or at least a little bit less pessimism. That's the way I would put it. Don't confuse it with any sort of like bullishness. The market is not turning bullish. The bullish bull market continues as long as the 200-day average continues. That was the bull market. As long as the 200-day mean continues to decline, this is a bear market. So we didn't stop declining. We didn't stop kind of like the bear side of the market to persist strong and overall kind of like dominate we didn't stop them from dominating the scene. However, the fact that it starts to flatten, it's definitely less aggressive, less bearish, right? Not more bullish, but less bearish. And here, as long as the prices on the Bitcoin continue to move sideways, it's putting a lot of pressure, a lot of supply pressure, selling forces, on miners, because it's typically average mining production costs, at least according to the data provided by the macro and micro. That tells you that the average price of production, the average cost of production is around 18,700, with the yesterday's prices at $20,000. And there's a lot of disparity when Bitcoin is trading below that level, well below that level, about 15-20% lower. This puts a lot of miners in a very uncomfortable position and in a very big discomfort of being a miner. It's definitely not really encouraged well by the expensive energy prices, right? And the expensive energy stocks are not something that you see slows down. You can tell there is a well-defined bull market trend ascending 200-day curve, which is this primary direction, primary trajectory, and you can now tell that it's stopping anywhere since it started, right? There's perhaps been a little bit of a slower angle of growth. However, it's been very consistent, very steady, very disciplined, very well-defined upwards trend. And right now, even though we have a little bit of a pattern, that may look like a distribution with this overall sequence of a rectangle, if you will, we marked the peak at 90.35 for the XLE, then peak overthrow around 93.74. So this overthrow, combined with the overall distribution around the top, just took us lower towards 81, 82 level, and with the 200-day average support, it's at 79.29, right? So this tells me that if the full mean reversion process is about to get complete, just like it did here, here, and here, right, as the prices oscillate around the averages, then we are yet to see the main support tested around 80 points for the XLE. If that happens, it would still not really kind of like slow down significantly the bull market. If you want to decide again if it's a bull market, if it's a bear market, you want to observe the 200-day trend, and you can tell that even though this 200-day trend doesn't seem to be stopping well on the energy side of the things for the S&P 500 sectors, then Bitcoin is kind of like in a reverse situation, right? On the XLE, the trend was strongly upwards, defined, well-defined, and continuous, consistent. Here on Bitcoin, it's consistent into declines, to the downside, where it's starting to kind of like lose a little bit of pace, lose a little bit of momentum, as it starts accounting 200 days back from the current dates and this lower period of sideways. So all that things concerned, and I would say that it's very critical and essential for Bitcoin that if it's supposed to bring the bulls back, then it obviously has to break above the 200-day average, right? Just like the S&P, just like the Dow Jones Industrials did. S&P 500 kind of like failed there. Of course, we know that Tesla is there, at the very lows. It's not looking too good. Well below 200-week average, 50-week average as well. It's not looking too good with the main support around $70 per share. So this brings a lot of consumer discretionary angles, to the downside. The relative rotation graphs are not looking too promising for overall, consumer discretionary. Like I said, consumers tend to not spend right now upon the discretion and rather prepare for something that is otherwise known as a recessive environment, as the leading indicators definitely show off the inflation is yet to be tamed, is not really working as fast as the governors would wish for the monetary policy. The job market is still high, and when they keep tightening and keep increasing the rates, and the job market doesn't react well, it's not a good sign because they have to keep up tightening. They have to keep up raising the rates. Even if it's at slow pace, then it's still providing much damage to the business, and overall may fall into self-fulfilling loop that is putting the economy into recession. And if that is the case, the consumers want to be ready, and the markets often price in the future expectations, the expectations of what the future will look like rather than the current actual state of the things. So this telling me that the consumer discretionary is heavily underperforming and Tesla stock is dropping heavily. It's telling me that there is a lot of pessimism, that there's a lot of disbelief in terms of what's stable ahead, right? That the future is not stable, the future is not really promising for the next couple of months. And well, the fact that the consumer discretion is heavily underperforming and trading in the relative downtrend against the S&P 500, which is there at the intersection of 100 and 100 points on this RRG chart. And on the contrary, basic materials, industrials, financials, healthcare, staples. So we're looking at energy, looking at a little bit of pace and moving into a weakening quadrant. However, those stock groups, those stock assets, sectors that I mentioned, are looking somewhat promising. However, there's a lot of participation from the defensive stocks. So defensive stocks and a little bit of basic materials, industrials, tell me that the industry starts improving a little bit. However, however, it's definitely not out of the woods. It's not out of the recessive period. And as long as it is in the recessive period and the recessive setup, and the consumer discretionary are still trading, on the losing relative momentum, and on the losing relative strength, trading well and underperforming the S&P 500, this is not a sign of strength. XLU utilities moving to the improving quadrant with the real estate, which is strongly interest rate sensitive. This tells me that, again, there is a little bit of a nature healing process, if you will. However, it's nowhere near closed. It's nowhere near solved. It's nowhere near out of the woods. And Bitcoin may suffer as long as it's kind of like not out of the woods, right? Because the longer the miners are unprofitable, the bigger the chances that the supply forces are going to increase as they have to close off their unprofitable business, selling their holdings to cover for the expenses, for the losses, for the damage, and at the same time increasing the potential damage. Right. So if I am to see bullishness on Bitcoin, I want to first confirm and see the bullish breakout above 200-day average. That is otherwise going to, more likely end up in a downside extension, right? So the miners are unprofitable. We're trading below the critical level of 17,500. The miners are unprofitable. The average is starting to flatten out, which is good, changing the angle at least. However, the longer that we stay below 17,500, the bigger the chances that the miners sell off and capitulate. And if that happens, it may happen that, it may occur that the miners capitulate, that the basically retail traders continue to sell off as a result of it as the stops get hit and trigger, which enforces and encourages the miners to sell off even further, which puts a lot of thought and fear among many traders to sell off even further beyond, and end up with this sort of like a deadly spiral. And if it ends up so, I would argue that Bitcoin may land somewhere between 12 and maybe 13, maybe $10,000. You never know. We've seen similar case in before 2018 when the miners capitulated and the market literally went down from 6 to 3K in no time. And it was 50% decline, right? And everybody had thought that 6K was the floor. So it might be similar. It might be similar. The best tip that I can get is get ready for the worst. Be ready for the best. Hope for the best and be ready for the worst is what I think is going to be the main repetitive pattern and trajectory direction for the next couple of months, as the first half of the year is likely slower for the business. Lots of businesses is closing down because of the recession. And just maybe you are going to put in the bottom somewhere on the cyclical assets, on the risk assets, on stocks, on consumer discretionary, on what we want to typically see to aspire and incline for the market to be good. So All things concerned, I wish you a happy Friday, guys. I hope you stay safe. God bless you all. And before I go, this is all to celebrate and to confirm that, well, some time ago we were celebrating the 5th anniversary of the Bird Nest. Right now we are into 6th year of operating. This is pretty awesome. We've been for the bulls, for the bears, for the sideways. Companies are closing. Amazon is selling off and laying off tens of thousands of people. We are here strong and tough, and definitely not going anywhere. Instead, we launched to celebrate our great anniversary. We launched an amazing deal where you can get and activate free membership. You can go and activate free membership with your calls only subscription. Calls only subscription, which gives you with our partners joint offer that if you sign up with a special link that we have up there on the website, we're going to be able to catch the free deal. And depending on which conditions you and criteria decide to follow on the Bybit side, you're going to be able to get a month or 4 months or even an entire year worth of 1428 dollars basically for free and no charge. We're going to charge you nothing. And if you want to get and receive highest quality calls with the great profitability that we are confirming with amazing calls, with an inclining trends and increasing strike rates and big amount of calls, some of them are really well automated, then you can get access to it, eliminate the stress and pressure of making the decision and timing your trades, and we can help you there. If you want to get it up for free, go to theburbiness.com, go to the subscriptions, go to calls only, and mark calls only with Bybit. Follow the instructions, and the free membership is yours for a month, for 4 months, and for an entire year even. That's pretty awesome. Hope you enjoy. Stay safe. God bless you all. See you around. Bye bye.